I've made over 2.5 million trading options over the last 7 years, and I made all of that trading with my own money. But honestly, I think prop firms are one of the best opportunities out right now for someone who wants to trade without putting too much of their own money on the line. So in this video, I'm giving you guys the exact blueprint that I follow, and if you stick to the end, you'll know exactly how to replicate this system step by step for yourself. Let's get right into it. But before we get into anything else, we need to talk about picking the right prop firm, because the rules and track record of the prop firm you pick determines whether your strategy can even work. And honestly, most people just pick whatever their favorite influencer told them to. And if I'm being completely honest with you, this is exactly why I used to hate prop firms. Firms changing rules mid-evaluation, denying payouts, and not even telling you guys why. They're shutting down overnight, taking everyone's money with them, and I literally watched it happen over and over and over again. Traders doing everything right, passing their evaluations, and requesting a withdrawal just to get denied for a vague reason buried in their terms they never told you about. So I stayed away, and I actually advised everyone against trading them. I traded my own live account and told everyone else to do the exact same. But the problem with only trading your own capital is that you're actually capped by your own capital, and everyone has a different financial situation. So at some point, I started looking at what a well-structured prop firm could actually do, and I realized that the problem was never the concept. It was that most of the firms running it were just predatory. But one day, a prop firm reached out to me, and it was by far the best prop firm that I've ever seen. The one is called Vanquish Trader, and yes, I am partnered, but I only accepted the partnership after I actually made sure that they were a good prop firm. I waited to see my students get payouts before I was actually affiliated, so I accepted the offer, and I also got payouts for myself. The reason why I picked Vanquish is because there's no payout caps. You can get an eval account, you can get funded, and you can get a payout the same exact day. They've been around for years now. They have the same exact rules what they had when they first got started. You keep 100% of the profits that you make, and there has never been a payout denial in the firm's history. Now that you know what type of prop firm to use and why, the next question is, what strategy should you actually trade on these prop firms? Now, if I'm being honest, every person I've seen blow a prop firm account wasn't using a bad strategy, because every strategy works in its own way. It's because the strategies they choose are way too complicated, which is exactly why you need a simple strategy with these prop firms, because you're already dealing with enough rules like consistency rules and drawdown. So the last thing you need is, on top of that, a strategy that requires 20 different decisions before you even enter a trade. The more complicated your strategy, the more room there is to mess it up, and messing up can blow the entire account. Now, the strategy I use to pass these accounts is a simple setup I've been trading. All right, so we're gonna go over a simple strategy that I use every single day for the past 7 years now. This is breakouts, right? This is a very simple strategy. The first step we have to find is key levels on the 1 hour time frame, and how we find these levels is by seeing reactive areas on the 1 hour chart. So for example, let's go over to MU, right? You guys can see on the 1 hour time frame that we have a couple of reactions here at the 685. This is something I'm looking at to the upside because we got the multiple reactions at a specific key level without any candles closing above that on the 1 hour time frame. But after we find the level on the 1 hour time frame, we then have to actually figure out how to execute this, because we can't just take it once it breaks. So let's go over to an actual trade that I took the other day on the video, 205 to the upside. This was a key level that I identified on the 1 hour time frame, and as you guys can see, 205 marked out. Now, the second thing that I need is to make sure price action looks good enough for me to take it. How do I make sure it's good enough? Well, I need to make sure that there's no extension. So I need to make sure there's no 5 candles in that one direction that are the same color. So if there's 5 green candles in that one direction and it broke, I wouldn't have been able to take it. I also need to see intraday reactions, which basically means I need to see reactions on the 1 minute time frame as well. As you guys can see, we came up and reacted right near that 205. Doesn't have to be exact, but it has to be close enough. As you guys see, reaction came down, came right back up. Buyers are aggressive. We are starting to aggressively climb, as you guys can see with the bodies of these candles, how big these candles are with this momentum, red to green into this 205. Everything looks good. Now, the last step here is to look at the time of sales. So time of sales actually shows me real time what buyers and sellers are doing, which is why my charts are basically naked. I have no indicators on my charts whatsoever, because the only thing that moves the market is buyers and sellers. And if I have something that shows me what buyers and sellers are doing real time, then I don't need anything else. So I use the time of sales to identify if buyers are weak or strong in a certain area. I want to make sure there's enough volume coming in on the buyer side. I want to make sure the velocity is there, the momentum's there, and it's aggressive. So once I saw all of that on the time of sales, the buyers are actually outpacing these sellers here. That is when I enter this 205, and I basically look for a 1 to 3 risk to reward, and then that's it. I don't need to pick the whole direction. I don't care where it goes after that. all I need is move like this and I was able to get a 1 to 3 risk to reward. But it's very sniper entries, super simple strategy. So as you guys see on my right side, this is the time of sales. Basically what I'm looking for is that speed and aggression. I want to make sure that this is actually moving pretty fast, as well as aggressively going to 80s and 90s into that 205 level. So what you guys can see right here, the tape is moving pretty well. Right, there's a lot of orders coming in. You guys can see that aggressiveness. So that's what I'm also looking for, is that aggressiveness. How fast we got from 70s to 80s and 90s, just like that, with the speed. You guys can see a bunch of orders are coming in. Green all around at this 205. We got in right before that, anticipating this level because it was holding up in the 70s really well. And boom, right? And then I'm waiting for this 1 to 3 risk to reward. You guys are going to see me get all out here in a second. Just basically waiting for a 1 to 3. We're in the 15s, 16s. Stop loss is going to be tight. It's going to be the open of this candle. Getting ready to sell once we get this pop over around 2030s. Just got to wait. Just got to be patient a little bit. Here we go. And all out right there. Literally said it live as well. I'm all out right there. That's it. We're done. We don't need anything else. But knowing the setup is one thing. In order to actually pass the account and get a payout, you're going to need a little bit more. So let's first talk about how to actually pass the account. Now, let me ask you, if I personally handed you $50,000 to trade with, would you change the way you trade? I would guess you would, because now that you have more money to trade, you probably would want to start making more money. And I understand why you think that, but you also need to consider the rules of the prop firm. I see this all the time. Traders have a great day, like they're up $1,800, $2,000, feeling like they're about to cash out and buy that Lambo that they always wanted, but they have no idea that day just made their account harder to pass. This is because something called the consistency rule, which says that your single biggest profit day cannot exceed more than 30% of your total profit target, which means on a $5,000 profit target, that's $1,500. And if you go over that, you don't blow the account, you just increase your target. So now instead of needing $5,000 to pass, you might need $5,500 or $6,000. So you just made it harder without realizing. So it's important that you actually have a strategy to pass the evaluation. Now, let me be clear though, the consistency rule is not there to make things harder for you. It's to keep things fair and make sure that you don't actually just full pour the account and pass and get a payout. So what I recommend is a $50,000 account. And what I would do personally, because of my risk, I would have a $5,000 position size. I risk 5% per trade of the position size, which means that I'm going to lose at most around $250. I could lose maybe 7%, maybe 5%, right? But it's right around that 5% that I aim for to make 15% of my position size. So around 750. And there's room for error here. But my goal is to make $1,500 per day on the 50K, and all I would need is around 4 days and I'm there. The reason why I want the advanced account is because the basic account has an intraday trailing drawdown. So if I'm up $750 on the day and then I go back down to break even for the day, that counts against me and I don't want that. That counts as negative $750 towards my drawdown. Versus end of day trailing drawdown, I'm just break even and there is no impact to my drawdown. So if you're confused, trust me, just get the advanced one. Now, once you pass, the next decision you make is actually the one that separates the traders who are consistent versus the ones that are starting over. Here's something that sounds backwards. The traders who pull payouts the fastest are usually the ones who blow accounts the fastest too, because the way that they handle the money after you pass determines whether you keep the account or lose it all in a single month. So if you want to actually keep payouts as consistent as possible, you need to listen until the end of this video. But I understand the situation you're in after you finally pass the account. You just spent days being disciplined, following the rules, capping your days, staying patient, and then once the account is funded, and the first thing most people want to do is withdraw. And I get it. It's the money you made without touching too much of your own. And every part of you is telling you to take it. But here's what actually happens when you pull everything out immediately. The account resets with a fresh drawdown limit. 3 average losing days in a row, and the buffer is gone. Now you're back to buying another eval, and then it happens again, and all of a sudden you're just burning money. You need to treat this like a business. So we're gonna keep trading after we pass and let the account grow to $60,000 before withdrawing anything. And at 60,000, the drawdown buffer has expanded significantly, so we have a lot more room to absorb losing days. Once we hit the $3,000 in profit, the buffer starts to expand, and that threshold is where the account starts feeling a little bit safer to trade on at $60,000. So at $60,000, we now have a $9,000 buffer. And I'm going to withdraw some of that, right? I'm going to withdraw around $5,000. So we have a $4,000 buffer left. And we're just going to keep building our account from there. What this actually does is allow us to have that buffer to continue to gradually get payouts as well while building the account at a safe pace. But we also want to make sure that we keep some money while we're making money. So on the $50,000 account, right, there's a couple things that we needed to make note of before we get a payout. The first thing is we have a $2,500 payout. And if we withdraw before this $52,875, it actually eats into our drawdown. So the safest approach is for us to get past this buffer, past the $52,875. Personally, when we get up to $55,000 on the account, I would withdraw down to this exact buffer amount, and we're able to pocket $2,125. And we still keep our drawdown of $2,500. So we don't blow the account and we still have the same exact drawdown. After that, I would build this back up to $60,000 and then just take a $5K payout, bring it back down to $55,000. And then now we have a $4,625 buffer, and we're just going to keep building and building from there. But we already secured our first payout, and then we secured a second payout while keeping this account safe and sound instead of blowing the account just by getting a payout. Now, again, if you want to get started on Vanquish and trade the same prop firm I do, click the top link in the description and use code LANDER at checkout for a huge discount. Also, people that use code LANDER have a significantly higher payout rate. Thank you for watching.